Okay, so we can come back on now. Okay. All right, so what the strategy does, what we expect is that we would prefer a scenario where the source and the breaker are close together. In fact, if they have a form of intersect, that gives us some form of confidence, right? Because when we sell from that point, we could be almost sure that the sell will last for a while. However, there are scenarios where we have the source and the breaker far apart, right? And having in mind that we actually want our retest to be done on the source, when the retest is done on a breaker, you want to be careful taking your trade off this point, right? Because it could just give you an LSB and then shoot back to make a retest of the source. So for that reason, if you want to trade off the breaker, I would advise that you allow 2 to 3 to happen, give you another order block, usually very close to the breaker, then this will now be a confirmed sell trade, with your first take profit being at 0.3. So let's go to the chart and see an example. So we have Euro USD on the 4 hours. See Euro USD 4 hours here. So Euro USD was clearly on a downtrend. Clearly on a downtrend. Yes, it's been recorded. Clearly, Euro USD was clearly on the downtrend, and we had an order block. Let's mark up the order blocks quickly. We had this order block responsible for this low here. Then we had this order block responsible for this low, right? This bullish candle, the last bullish candle here. And usually I've stated that if I have a bullish candle, if you understand how candles work, when it opened here, it pushed up first, then came down. That wick to the top side for me is part of my bearish order block. The wick up there is part of my bearish order block. So from that point, it traded and created this new low where the cursor is right now. Then traded back up to retest the order block and then dropped even further, right? Now, when it dropped further, I'll be using this smallish candle here as the next order block. Price traded above it, and once price traded above it, this order block automatically became a breaker. This order block automatically became a breaker, and now we have a source. Now we have a source right about here. Right? Now we have a source right about that point. So what would we be waiting for? We would be waiting for a retest of the breaker and the source to buy, which never happened. There was no retest of the breaker, neither was there a retest of the source. Price pulled back down and gave us a new high. So now I have a new order block here. Now, because I didn't have a retest of this and I had a new high, this was my retest of this order block, and this was my bullish move. Right about now, price is retesting this order block again. And what we'll be expecting is for price to make a rally, taking out this, right? Basically, that's what the strategy does. Right? So you take your trades from the order block, and your entries are on the 15 minutes or the 1 hour time frame, and you wait for certain things to happen before you pull your trigger to go long, obviously there will be some reaction here because of this order block here. But ultimately, if this trend will continue to be bullish, I expect price to break through it and move on, right? I expect price to break through it and move on to the top side. So that's what this strategy is all about. We could go over this over and over again. We've done some examples before in the past. For those of you that are new, we've done some examples. I'll just give you a brief rundown and we'll proceed into what we have today. So we had, just a minute. Let's move, let's come somewhere here. We had this high. I have an indicator on my screen that lets me know that this point here, the red dot, is actually higher than the double top here. So this was the source and this was the breaker. That was the last bullish candle and bearish candle responsible for the high. Sorry. That was the last bearish candle responsible for the high. We usually will use a yellow color for that. Now price broke beneath it. And once price did that, it meant that we were now sellers. And I'll go back again to explain what this means. It means we had an uptrend. We would be expecting, what we should be expecting is a continuation move. But rather than have a continuation move, we had a break below B, right? That signifies a break in structure. We will now be waiting for a retest of the order block, or which has now turned into a breaker, to continue our trend to the downside, right? And that's exactly what happened here. So we had this push up. We were expecting a lower high and a higher high, but rather we had a lower low. And once we have a lower low, we would be waiting for a retest of the breaker or a retest of the source to go short. In this scenario, we didn't have a retest of the source. We just had a retest of the breaker right about here, and price dropped, right? Price dropped from that point. And immediately price dropped, you notice that everything here was more or less like consolidation. Price didn't go lower at all. Price never went lower. Price went lower here. At that point, we begin to mark up our order block. We'll begin to mark up our order block once price trades lower. So we have our order block there for a sell. Price never came to retest it. It simply means we had no entry for that scenario. Then we had another order block here, right? We'll be waiting for price to trade into the order block and give us a reason to sell. And that was exactly what happened. Price traded into the order block and gave us a reason to sell. Gave us a reason to sell. Then this was a low. Price traded back again to retest that same order block and gave us even a much lower low. So all our entries will be at the order block. We wouldn't chase price in between here. Of course, if you've watched our video on how to use the pivot, you might still get entries in between. But using this strategy, we trade just at the order blocks. Let me take out this quarters theory and some of these ones out. Very good. So price continued giving us lower lows. Then we had this low here. Price traded into this order block. This was another order block, the last bullish candle. here, the last bullish candle before the low. Price traded into that order block and dropped, giving us a lower low right about here. Then the order block becomes this last bullish candle before the low was created. Price played along for a while and broke above here. When price broke above, we now have a breaker here. And then we have a source as the lowest low. We have a source as the lowest low. I'll be waiting for opportunities to buy. We'll be hoping that price will, after breaking out, retest the order block, or retest the source, or retest the breaker for us to buy, right? Price never really did that, but it gave us an opportunity to buy. If we go to the higher time frame, we might have had a reason to frame a buy there. And it continued giving us higher highs and higher lows. Now back to what we want to look at today. Now, price didn't really give us a retest of the breaker. Price didn't give us a retest of the breaker. So if you have an untested breaker or an untested order block, you extend it to the future. There's every likelihood that when price comes back to retest, it will reject from that point. And that's exactly what happened here. The price came back to retest the breaker and gave us a reason to buy. Price came back to retest the breaker, gave us a reason to buy, right? Price came back to retest the breaker yet again here, and it's also giving us a reason to buy. So basically, that's how this strategy works. For those of us that are new, if you have questions, you could put it up in the chat box for us to go in. I'll pick one more example in Euro Chef, USD Chef. Sorry. Symbol changer. Okay, I can't find that. All right, so
can you look at GU, please?
At what? GU?
Yes. Sorry,
I'll,
GJ. GJ.
GJ, I'll look at GJ, no problem. So for UCHEF, we are obviously bullish, right? So we don't need to start marking up the source and the breaker and all of that. Let's just come into what happened recently. So we had this breaker, or rather this order block responsible for the push up, created a high above this here, then gave us another order block here with the wick. Always use the wick to the downside, and that gave us this high up here. Now note this, when it gave us a high, it gave us another order block in between. When I have another order block that is enveloped by a bigger block, I simply just use the bigger block, right? If I have a smaller block within a bigger block, I just simply use the bigger block and leave out the smaller one, right? So more or less like price coming back to test that order block, and then it rallied up. Now we have another order block being this particular one here, right? Price came back to test it, and it's giving us a reason to want to buy. That's UCHEF, right? So you said you want us to check GJ. GJ. Anything specifically you want us to see in GJ?
I have a question.
a trade. I took it in the morning, but was in profit. But after a while, it's been dancing. I don't know.
Oh my. All right, so let's see. Were you in a buy or in a sell? The order flow here is
A sell.
the order
It's
flow
actually
here. The order flow here is still bearish.
yes.
The order flow is still bearish. This is the order block of interest here.
Yes.
Very good. So I won't be in a sell in this particular scenario. I will be in a sell only when price trades back into this zone. Then I'll be looking for reasons to want to sell.
So,
As far as I'm concerned, price might still want to cover up the gap. There is a gap here. You can see the gap. There's a fair value gap between this point and this, and it hasn't been properly filled. There's a fair value gap there, and this candle didn't really fill it up. I'll be expecting GJ to rally to this point, and inside this box, I begin to look for reasons to want to sell based on the candle formations inside the box. If GJ had gone lower, giving me another order block, then the new order block becomes my point of reference. For now, I'm not doing anything in GJ. If I had made this move, which was a very, very sweet one, right? Because this was the previous order block right about here. This was the previous order block. Sorry. This was the previous order block, the bullish candle before the drop. Price traded into it and dropped massively. This looks well over 100 pips, right? Close to 200 pips. If I've taken this off the market, I'm not planning to give it back to the market until I see price coming into my zone. When price comes into my zone, then I begin to look for reasons to sell. I'll leave GJ out of the trading, the pairs to look at. All right, I'll go back to you, Chef. So I'll be looking for reasons to want to sell right about here. Right.
thank you, sir.
Thank you. Let's look at GU. What played out in GU today?
G is more or less the same thing.
G is more or less the same thing.
With GJ.
All right. Yeah, but in GU we had a retest. This was the last block, right? But remember, I told you that this block is inside this bigger one. So I could as well just have everything here as my block, because this smaller one, consumed by the bigger one. When price comes into this region, I'm looking for reasons to want to sell. Price came into this region somewhere here, right? So let's mark that up and see what we would have done. The price came into this region here. I'll go down to my 15 minutes and look for reasons to want to sell GU, right? I guess this is too dark. Let's look for something. All right, so this was the retest of the order block. The red line down here denotes the order block in the higher time frame. This was the retest of the order block. So what do we want to see? We want to see a peak formation high. And how do we know that we have a peak formation high? We kept having higher highs, higher highs, higher highs. This was the last bearish candle before the high. We'll mark up that last bearish candle. We'll wait for price to break beneath it. When price breaks beneath it, we'll be going for a sell upon a retest. As I will go in here, stop loss 23 pips, and this gave us maybe 33 pips, not as much as I would have wanted, right? Not as much as I would have wanted. In fact, I took this trade and got out almost at break even, right? Because I was expecting price to come take out um, at least um, the dotted line here. I was expecting price to come to yesterday high, and price never really did. But for
That's
me,
why I'm still in it though.
that's why you're still in it.
Is it
Oh,
safe?
well, who am I? One thing I want you to know is this. Once you're in profit, number of pips, break even. If price comes back to take you out, you look for another reason to go short. We don't want our winners turning losers, right? Price gave us
Okay.
a good reason to sell. We had some pips off this trade here. We had wonderful pips off it. If you want to even make this sweeter, you may want to take your entry from 5 minutes, fine, but I'll suggest 15 minutes and 1 hour for our entries, right? Someone said I should go back to UCHEF. So UCHEF on H4. Yeah, you wanted to ask a question. Go ahead, please.
I wanted to ask, why is it that you did not draw your order block on the last week?
Oh, I see your question. You see this as an order block, right? Yes, I see your question, and that is true. I omitted that. This should be the order block before the high, and this will be a breaker, right? This becomes a breaker. So let me take these ones out. Sorry, take this out. This becomes a breaker. This is an order block. And this then becomes our source here. Thank you for that observation. This becomes our source. This order block. Then when price traded beneath it, we'll be looking for reasons to want to sell upon a retest of this zone. Within this zone, we'll be looking for reasons to sell. We don't pull the trigger automatically. We'll wait for reasons to want to sell. And the reasons to want to sell is in the 15 minutes when we have an LSB or market structure break on the 15 minutes to want to go down. Now, last week we looked at top-down analysis, and we said before we pick, maybe I should quickly do this before we go into top-down analysis to help us understand top-down analysis. Now, if you follow Michael and other, yes, this is the markup. Yes, true, Darren, that was the markup you sent this morning. I remember now, right? So if you follow ICT concept, you discover that they go to the higher time frame, like the daily or the weekly, to frame up the trade down to the lower time frame, right? But because most times we are not swing traders, we just want to go in, get 5% of the account and leave the market. Especially recently that price hasn't been moving the way we wanted it to move because of the coronavirus, right? You notice that when price is in an up move on a higher time frame, it might actually be in a down move in the lower time frame, right? But the higher time frame takes precedence over the lower down time frame. So you want to ensure that you still go to the higher time frame and have a global picture of what is happening before pulling your trigger in the lower time frame. And by that, I mean, if price is making higher highs on the higher time frame, and you have a breaker on the lower time frame, in this case 4 hours, you should mark up your order block, your bullish order block, on the daily, on the weekly, and expect that when price comes into it in the 4 hours, there should be some form of reaction, right? Because what we're trading is, even though 4 hours seem to be a higher time frame when compared to 1 hour and the likes, but it is still a lower time frame when compared to the weekly and the daily. So what we do is that we'll go to the higher time frame like the daily and try to frame up what we see. On the daily for UCHEF, right? On the daily for UCHEF, we could see this zone here as a possible reversal point for UCHEF. UCHEF needs to do something very, very dramatic to break above this point. Now, if you're a student of ICT, you also notice that there was a fair value gap and UCHEF just about, let me take out the previous make visible on 4 hours. Make visible on 4 hours. So we have UCHEF here. I would be expecting a rejection of this zone on the lower time frame. So even though the higher the H4 time frame happened to be bullish, when it got into this zone, I should be expecting some form of rejection of this, which was exactly what happened when you come to the 4 hours, right? Price traded into that zone, went a little bit higher, taking out liquidity, and then dropped. Now, so are we going to see a change in direction, or will price just move to the upside? That remains to be seen. I see a fair value gap somewhere here that price hasn't covered. So could it be possible that if price wants to go to the upside, it might first come down here, even seek liquidity around this point? Of course, here, the tip of this place is also something that retail traders will have their stop loss at. So could it want to do that before it continues the up move? Is a possibility, or will it melt down completely, right? So what we do is that we trade per the day, per price action. What is price action telling us? Presently, price rejected of this daily zone, and we're yet to see it's returning back into it. We're yet to see what's going to happen. Let's see on the weekly time frame. On the weekly time frame, we can't really make out what is happening here. Yeah, it seems somebody has a question. What is BTMM and what is ICT? Oh, okay. BTMM is Beat the Market Maker. ICT is inner circle trader, is another concept of trading. Though ICT by Michael and BTMM by Steve Monroe, ICT also teaches BTMM method, Beat the Market Maker, but he doesn't use, he's not heavily indicator based like you have Steve Monroe. Steve Monroe is heavily indicator based. So you notice we use TDI. That TDI is from Steve Monroe, where the other blocks is from the ICT concept. So we want to go into the higher time frame to see what the higher time frame is giving us, and we use that to frame our entries for the trade, right? So if we go to GU, for instance, is it GU now or EA? Let's take EA. EA has been on a downtrend, right? EA has been on a downtrend. And from the formation of EA on the weekly, you might want to assume that EA might be coming all the way here, right? Because you have a bullish order block right about here. You have a bullish order block right about here. So EA might be coming all the way to this point, right? There was another order block somewhere here, and EA broke through it. Was about breaking through this now. So this might be where we might be expected to see some rejection of Euro AUD. Now this is the weekly bias or order flow. but we don't trade off this because that might mean waiting forever to take a trade. So what do? We go to the daily time frame and try to see if we can find something else. Now the daily time frame also gave us this order block here, and you can see this was the down candles push. Nothing, it seems like nothing is going to stop EA from coming down, except if price rejects tomorrow, and that will mean that it took out liquidity. But I don't see that happening yet, because if it's going to take out liquidity, usually the way it behaves is that it just comes, peaks down, takes out the liquidity, and runs back immediately. And we didn't see that happening here. So there's a possibility that EA may continue to drop until it gets to this point. Now, having this at the back of our mind, we now go down to the 4 hours and begin to do our markups of order blocks, right? We'll begin to do our markups of order blocks. So that's how you frame up your entry for this strategy. Yes, we use both systems in the same analysis here. We use both BTMM and ICT. Now the BTMM, the Steve Monroe's method, is where we use our TDI, basically just the TDI. And sometimes we use the moving averages, but in this group, we are not heavy on the use of moving averages. We basically just use our TDIs to spot out when we need to take a trade. Nathan, do we have any trade we took today with TDI confirmation?
Yeah, almost all of them.
Almost everything we took today was with
either
TDI.
Divergent or Shark Fin.
All right, let's look at, was it GU? Yeah, who took EG today? EG played the smart one on us.
It's left us. We were monitoring it, we couldn't wait.
All right, so let's look at this. We want to wait for, okay, Steven, okay, he took it. Now, we notice when we're taking our entry on the 15 minutes, we want to see, let me change this, make it white so it shows clearly. On the 15 minutes, we want to see the blue band closing above the white line, right? The blue line closing above the white band. That is an indication. We use that to indicate manipulation, right? And we want our peak formation to happen at about the same time when we see this. So we want our peak formation to happen around that same time where we see a close. What we'll call this a shark fin, right? Then it gives us a good reason to want to sell from that point. It gives us a good reason. Here was one for a buy, even though this was against the trend, but we had a shark fin right about here. Another thing we would like to see is divergence. Usually this was a divergence, price was making lower low, and the TDI was making a higher high. Then we would have had this point here as our last bullish candle before the drop. The last bullish candle before this drop. When price closes above it, we are buyers from that point. So price played along a little, but eventually rallied to the top. So those are the things we look at. We look at divergence, we look at shark fin if we want to take our trade of the 15 minutes. But we can also take our trades without actually using the TDI. We just wait for last step to be broken on the 15 minutes or the 1 hour, and we pull our trigger. Right, the last thing I'm going to explain today before we move on. Hey, we have Prof online. We have Prof online. Right, the last thing I'm going to explain today is the concept of stop hunt. Some people call it stop hunt. Some people call it liquidity grab. Some people call it several names, right? We'll be looking at that quickly before we call it a wrap today. And I'll give you an explanation using from TradingView. Now on your 15 minutes, one way you could also take a safe trade off your 15 minutes is to wait for liquidity to be taken before you get into a trade. You usually would see this either at points where you have an intraday M or an intraday W. So let's say I have, but not this, sorry. Let's say I have something that looks like an equal high here, right? I will want a situation where price trades above this a little, takes out liquidity, and then drops heavily away from that point, right? And this drop is the one responsible for the break in structure, right? So now I have stop hunt and a drop. What Michael will call a turtle soup. Is it a turtle soup, Prof? Can you still remember? I don't use it often.
Yes.
Yeah, very good. Okay, a turtle soup. He calls it a turtle soup. The opposite is the one that stops at the breaker is what he calls the Judas swing, right? So this is like the turtle soup. When we have this kind of scenario, it becomes very sweet to take this trade. Right? Now you can trade this one irrespective of the order flow. So for those of you who like trading against the trend, this is a formation I want you to begin to try to see in the market, right? We'll have another webinar sometime this weekend before the week runs out. And I'll give you there are three combinations, three things, three ways we can find this in the market, right? I'm just explaining the first one. You want to see liquidity taken out. You want to see liquidity taken out. And once liquidity is taken out, you want to see price trading quickly away from those peaks. Then your entry will be when price trades back into this zone, right? It actually has a fib level for it, but I will not be discussing that today. Price trade back into this zone, and you will now continue to trade. The reverse is true for a buy, and I think something like that was what happened in Euro USD, right? Look in GU, right? So we had let me
Yeah. Even Euro USD.
even Euro USD, something like that happened, right? So you can see price coming out to take out liquidity, took out liquidity and ran away quickly off from that point. They just trapped some people and ran away quickly. Now, when I say it is an intra-day M or intraday W, you understand that if you know that these dotted lines here are actually this dotted line actually represents yesterday's low. Guys, just give me 30 seconds. I need to mute something. Give me 30 seconds, please. Sorry, guys, I'm back. It's raining. It's raining and it's windy.
Okay. It just started at our own place now.
Yeah, I needed to shut the windows before everywhere gets flooded. Right? Now, this is what I want you to see. This low here, I'm going to put a straight line here and I want you to see it. This low here, can you see that is yesterday's low? The dotted line I was referring to coincides with yesterday's low. yesterday's low and this low here forms the double bottom I'm referring to. You can also use this low, this point X, to also stand as something that looks like a double bottom. I'm waiting for a liquidity raid, right? I'm waiting for them to raid these bottoms. If I go to the 1 hour, you might see it even clearly. Let's magnify a little, right? Notice that bottom there, this. I'm waiting for price to raid. If I put another line at the lowest point here, you'll notice that they raided all of these points. Can you guys see? They raided these lows.
Yeah.
And immediately it was raided, price ran away, which was this push up. I wouldn't be chasing this. I'll be waiting for price to come back into this bullish engulfer. Now I'm going to mark up this bullish engulfing candle. I'm marking it up. I'm waiting for price to come into this bullish engulfing candle to now pick my trade for a buy. I don't know if it makes sense. It might take a while or two. It might take a while or two to grab the concept, but it's the concept of liquidity grab, or we call it just taking out liquidity, right? You see it, and this can happen if I see this in a counter trend, and on the higher time frame, I can see a fair value gap, like it happened in GU. Remember, in GU, when this happened, we had fair value gap, very large one, a void, right? And we saw that liquidity grab. Price might just be going to fill up that void. Price might just be on its way to fill up that void. So this gives you a reason to want to hold on to your buy, or you want to trade against the trend, because you now see a setup that tells you that price might be going. They've grabbed liquidity, they've taken out liquidity at that point, right? You can see this on every time frame. You can see it on 40 minutes, on 30 minutes, I beg your pardon, right? And the easiest way to see this is to use our daily high and low, right? So when price peaks beneath the daily high and low, you want to go back to your 1 hour, or you want to squeeze in to see if liquidity has been taken at that point. And by liquidity, I mean not just yesterday's low, but consecutive days, like 2 days low. If you have 2 days with the low almost at that point, you want to see price taking that low out and now giving you a quick rally in the opposite direction. You'll be waiting for price to come back into that zone to now buy. So let's say you're on 30 minutes. In this case, you have price coming down. No, this will not be a very good example, right? This will not be very good. Let's look at UCHEF. Let's look at UCHEF. Let's look at UCHEF, for instance. You have UCHEF here. Okay, very good. Let me look at gold too. Sorry, 1 minute. UCHEF should do this. One hour. All right, so we can see some highs here, like equal highs there, and price traded above it and rallied quickly down. Our entry, our perfect entry for a sell would have been when price traded back into this zone. But price really didn't get there for us on this particular day for a sell. Price seemed to be coming in here. So could we have gotten a reason to sell? But remember, we have a higher time frame bias. Why price dropped rapidly here on UCHEF? It came into an order block. Let's see if we can see one for a buy. The examples abound, and you can take that if even if you are against the trend, because price trades up and down. You want to see price, like in this case, you want to see price taking out liquidity and price coming back into the order block that was so formed to go short. The game here is to see a rapid move away after taking out liquidity. If the move away is not rapid, it might just mean that price action was doing its normal thing and there was no manipulation in the market, right? We've had enough time today, so it doesn't look so long. We enter after liquidity is taken. No, we don't enter immediately. We don't know if liquidity is taken yet. Price could just be doing its thing. The only way you can ascertain that liquidity has been taken is that we assume that once liquidity is taken, the market maker will move swiftly away from that position. He will move swiftly away from that position. When he takes liquidity, he moves away swiftly away from that position. That is what will give you the inclination that this is what the market maker is doing, right? So like in this case, you have some lows here. You have some lows right about here. You have some lows here. He just dipped beneath it and rallied away very quickly away from that point. It's like there are some stops here, right? Some sell stops, some stop loss, whatever it is, there are some stops at this point. And it dipped in, picked that stop and rallied away quickly. What you should do, this is in the 1 hour time frame, you should mark up this order block here and wait for price to trade into it, and you will get another explosive move. This is irrespective of the order flow, right? When there's a liquidity grab, they tend to want to do it more than once, right? They tend to want to do it more than once. So once you have that liquidity grab, you're waiting for price to trade back into that zone and to rally. Will it work all of the time? No. And the last thing I want to state here, that this thing I just explained here can be done on virtually every time frame. So if I go down to the 30 minutes, I can see my engulfing candle, and that's my entry. If I go down to 15 minutes, I may want to pick this bearish candle here as my zone. And if I pull it long enough, the bearish candle there, I have an entry here for the long. Hey, I don't know why price has to test the zone again. I don't know why price has to test the zone again. What we do is that we simply just look for patterns in the market that repeats itself, and we try to, maximize that opportunity that the market is giving us. That's what we try to do. Why it does it sincerely, I don't know. All right, so we want to call it a wrap here. If there are no questions, we'll call it a wrap. We'll be back sometime within I'm not a market maker, so I don't I don't have an answer to that question. Thank you. Right, so if you have other questions, join, drop your questions on the SimplyPips chat Telegram. We'll see how we could answer them. If you feel you have better ways we could do this thing, why not let us know? We are all learners. We're just trying to get our own share from the global market. Thank you for coming online. Have a wonderful evening.
Thank you, Bishop. Though I came late, but then thanks.
Okay, don't worry.
I hope it's recorded, sir.
Brief but loaded. Thank you, sir.
Thank you so much. Somebody say first time in the Zoom. I just be here for 15 minutes. I loved it. Yeah, well, thanks. We were live on
YouTube.
On YouTube. So it will be there, and we can.
That's still recording.
Yes. Thank you so much. Have a good evening.
Thank you.
Thank you. Thank you.